Hello, John Markey here, founder and CEO of MyBuilderCPA, and I just want to give you a quick tutorial as to what you can expect on our Tier 1 Pro Growth Plan when it comes to monthly financial reporting. So the goal is for this to be a really useful tool that makes your situation better. So I'm always trying to contribute an extra layer of knowledge that allows you to take immediate action and improve something at your company. So starting out with the title page, this is what it looks like. We can replace our logo with yours. It shows what date that it was prepared on. And as with all of our reports, they are for management use only. So we do not compile or provide any level of assurance or attestation on our reports because they are so heavily influenced by you and any QuickBooks entries that you might make or information that you give us to make QuickBooks entries on your behalf. Then when we move into the next page, all of this is customizable. So these are just the 4 metrics that I happen to look at first. So current ratio, which it shows you the current assets divided by current liabilities. So this company, this sample company, is solvent, which is good. Their current assets are greater than their current liabilities. Based on their budget for the year, they've achieved 41% of their revenue goal for the current year, and that puts them ahead of the target where they were at the same period last year. Then it shows cash coverage days. So based on everything, the way that it's going, expected incoming draw payments, routine outgoing expenses, this company can expect to have enough cash for the next 180 days. After that, they will have to take action, whether it be win new jobs or lower their overhead budget, something like that. And then their net profit margin, which is the most important number in my opinion, showing overall profitability, hovers at around 9%. So that we haven't looked at the gross margin. In this case, I would expect that to be a lot higher because all of the overhead expenses are taken out of that. Then as we move to the next page, these are just our MyBuilderCPA notes. So we give you some notes on revenue. We try to pinpoint the jobs that are bringing in the most revenue. So in this case, these 2 jobs are bringing 10% of total revenue for the first 4 months of this year. And then we also want to look at the jobs that created the least amount of revenue because those might be jobs that you'd want to focus less time and resources on. And then we give you some overall notes. Revenue has improved compared to the same period in the prior year. Since all of these are fake numbers, they're not all that meaningful. And if you have specific metrics that you want to track, such as maybe current ongoing jobs, they don't necessarily have to be financial metrics, but a one-stop shop report for how your company is doing, we can just add it in. Then by standard, we comment on expense notes, and then we try to give you some overall notes that allow you to take that action I mentioned earlier. So we recommend trying to pay down the new loan payable as soon as possible to minimize interest expense, and think carefully about taking on any more debt. Also arrange homeowner contracts so you get paid for the expenses before you have to fund them on the job, and also maximize the terms with your vendors and subcontractors so you don't end up in a cash flow negative situation. A company can be totally profitable but cash flow negative because of the timing there. Then we get into the guts of the report. So we do a company-wide profit and loss statement. So we want to look at the big picture first as far as net income. Then we look at the balance sheet, which is a snapshot in time based on what balances are in the bank accounts and any loans or other liabilities that might be outstanding. So this particular business has some accounts payable. Looks like they have a loan that was mentioned on the commentary, and they also have maybe some payroll liabilities or something like that. Oh, and they also have a pretty big note payable here. Then we want to look at our accounts receivable aging summary. These might be customers who forgot to pay us, or invoices that just need to get marked as paid, or something more, but we definitely want to follow up with the oldest ones first. And in some aspects, we just need to get this report cleaned up for you. So we appreciate it when you review our work. We also have accounts payable, so this gives you an idea of bills that might be coming due soon, or the ones that are already overdue. Anything that's overdue, we try to tend to that as quickly as possible. And then we get into some of the job P&Ls. So this is just a sample here. One of the customers of Craig's Design and Landscaping is Amy's Bird Sanctuary, and here's a dedicated profit and loss statement for that job. And then the remaining pages are just more dedicated profit and loss reports for those individual jobs. If you've been inside QuickBooks Online and working with the P&L by customer or the P&L by client there, you'll know that it's one big P&L with a lot of different columns. And while that report can be useful, sometimes it gives us a little bit more space to think if we have one page for each and every job. On the flip side, this can make this report really long if you have a lot of jobs. So we just have to use our best interest and look for input from you. So the overall theme here with this management report for the Tier 1 Pro Growth Plan here at MyBuilderCPA is that it offers the most amount of customization. So if there's specific key performance indicators you want to see in your report, we're happy to incorporate them. And we want to work closely with you to give you something that's meaningful and powerful for you so you can improve. Even if you have an awesome home building business already, we want you to be able to take it to the next level. As always, thanks for watching. Have a great day.